Ever wonder why some traders catch sniper entries while others get stopped out? Secret isn't any fancy indicator. It's in combining trend lines with key levels and understanding market structure and price action. Let me show you how it's done.
I was an ordinary boy.
It's Minapers here, and in this video I'll be breaking down how to measure trend line support and resistance zones, or supply and demand zones, or both, to find high accuracy entries with confidence. So the first thing you should do is you mark your key levels and identify your support and resistance levels on higher time frames, like the 4 hours. Identify your support and resistance levels and your trend lines, your major trend lines, the 4 hours. So let's get into it. So I've actually drawn the trend line and the support and resistance levels. If you don't know how to do this, I draw videos on this before. You can go and watch them. It will really help. So now I want to mark out the supply and demand levels. But take note, this is a hindsight chart. This market has already played out before. So probably we won't all everything down. It's not like we're predicting, it's just like we're testing to see how what we've learned so far works. And this is it. Here you now have trend lines and support and resistance levels and supply and demand levels from the highest time frame I use, which is 4 hours. Then you now drop to 1 hour and see if you can do the same thing. Let me go to one step. You might be wondering, why didn't I do it from the previous part of the chart? That part isn't that much relevant. Even this farm I'm doing isn't much relevant because this is not what's happening in the correct market. We only use this like this when we want to backtest. Aside backtesting, it's not that relevant. So we have this trend line also here. And then we now have this one here. This is the previous resistance, and this one here also a previous resistance. Then when that one break, you have this one here. So what is the concept behind this? The concept behind this is very simple. You want to sell when price comes back to previous resistance, even if it's not on the trend line, but in line with the current trend. And you want to buy when that happens also, when price comes back to previous support, even if it's not in line, even if it's not on the trend line, but is in line with the current trend or with the major trend. Then you want to sit out when the market is ranging, and you won't do anything when price comes back up. Like you sit in hands when price doesn't follow any of these rules you set in place. So the next thing you have to do is watch for intersection zones, probably confluences, zones where a trend line meets key levels. This doesn't always happen at the time, but when they do happen, they actually people call that sniper trades. I don't really see it in a sniper trade. I believe that the market is like a moving train. So long as you can catch up with the train, like can follow the train, follow the train, hop on the train and follow the train, then you can get something out of the market. But most people say there's something called a sniper entry where you enter and there's no showdown and it just goes to your direction. Sometimes it does happen, but I don't usually believe in it. I don't like taking it as something like, oh, okay, this is something. This is what I want to have in my head. No, just, okay, maybe there's something called sniper entry, but I don't believe in it. So that's basically it. So we have something like that here. Here, the price did not come back to the previous supply zone. Here, this supply zone, and here's resistance zone. So, but price came back here. This is the previous resistance, and this is a trend line. If you go down, or when I go down to 15 minutes, this 25th September, you will see that price did a very good reaction here and a stop formed here. This is a trade you can take. This is a very, very good setup that you can take. Let's see it. From here, based on our previous video, you can have impulse correct. Impulse correct. This is an impulse, but you need to take out this side, so I don't usually count it. I just go straight to impulse correct. Impulse, I took out the high, this one here. Then correct, impulse, four highs, price broke out of it here. From this close here, you have your entry. Price did this and boom, down to the downside. This all of the sniper entries. It doesn't come all the time. You need to have that at the back of your head. It doesn't come all the time. You need to have that at the back of your head. It doesn't come all the time. But it's like magic when it happens, because it's more like when preparation meets opportunity. It's phenomenal, like it's awesome, it's amazing. It looks like magic when you do it. People like sometimes the results might surprise you sometimes. Maybe like am I the one that did this? So always keep practicing, keep praying. Sniper entries do come, but they don't always come. Just have that in mind. So when you see something like this, you wait for a confirmation, which is what I mentioned here. The counter line break, which would have been here like this, this lows. The counter line break might have made you enter slower. Then use the MS break to counter with market structure break to counter that. So on the break of the market structure, you take what the trade and write it down. You see, 1 to 2, 1 to 3, I don't know what. You take your trade. This is sniper entry. This right here. Plan the entry, enter on the close of the candle that breaks the market structure depending on the momentum. I've said this before. To watch previous videos, you understand. Place your stop above or below previous highs, previous lows. I've said this before. Go to previous videos, you understand it. Which is simply this: when you enter from this candle, the entry is here. Stop loss should be somewhere here. 17 pips can make you round figure. 18 pips, probably 20 for easier pip calculation. But for me, if I was here, I would have made this 18 pips. Then I should get 1 to 2. But if I want to get a little bit higher, the system I'm using, taking measure moves, I'll make a video on that later on. And boom, you fit your TP. Every other market is doing here, unless you're 100% take 1 to 3, 1 to 4. But once you're taking some 1 to 2, everything about that the chart is doing here, it's not your concern. This is what you know you can keep repeating and you can control. You take it and leave the market. You see, let me check if I'll see any other place where something like this happens, because this thing doesn't happen all the time. It doesn't always happen. And if you watch, you should actually target previous logical areas. Places like potential supports that without resistance is broken, which is this here. But you went far below that. So if you made this, I don't think there's anything to regret about it. It's a good good P&L. So let's check for more. Now after this setup on the same level, the same zone, we now have what? A previous or a supply zone there from the 4 hours time frame that we marked out before. And this one now is still the same process, it's still the same procedure. But you can reduce the trend line to allow you to enter faster, which is also more risky. So just the same thing, simply the same thing. So now you now want to see the break of this one here and the break of this market structure here for you enter. But it's also a sniper entry. Price touch trend line on previous supply zone, but still it didn't go below previously. That I say it doesn't happen every time, right? And it doesn't work like you think every time. Now if you ignore this trade here, because this is a near session trade, if you ignore this one here and went ahead and take this one here, which you didn't know it will form, it just happened. This also, the market structure is also there, and you can have impulse, these are impulse correct, impulse here. So probably from here you want to sell, take out where this low. Stop loss might be too wide, but even at that, it's also the sniper entry. You see it, instead I stayed in longer session and you ride it through to your session. It happens like that, but I don't see this as a thing, because if you start taking this like for what it is for sniper entries, you will stop paying attention to the right setups that are supposed to take or other stops that are supposed to take, and just be like, sniper entry. And when, as a newbie who hasn't mastered it that much, when you don't see it over a long period of time, you start, I want to trade, and you start making mistakes. So when trend lines and key levels align, the market is giving you a clear signal, because that's where patience needs position. and sniper entries, bro, they are born there. You need to be very, very patient. I don't believe in sniper entries, but if you do, you've got to be patient because this things require patience. Like I said, not from all the time. It requires patience, discipline to stick to the rule, and commitment. So now you know how to combine trend lines with key levels for sniper entries. Next video, I'll show you how to spot trend line breakouts that actually lead to reversals, not fake outs. Hit like, subscribe, and keep mastering the trend with the Invictus Talisman.